You've really ramped up the development of electric vehicles, increased the investment, your stock price is up. So give us your sense of what's going right at Ford right now.
Well, first of all, we have a great team. David, we're making more money. Our base business is getting more profitable. We're fixing our launch issues and our quality issues, and we're aggressively moving into battery electric. So our ambition is to be the #2 battery electric manufacturer, seller here in the next couple of years in the first inning of this transition. So I think it's both the base business and leaning into these connected electric vehicles.
So as you pick up, how do you manage the danger of getting, if I can put it this way, out over your skis? I mean, I know that the Mustang Mach-E you've had to triple production of. You've got the F-150 Lightning, you're
Yep.
limited at 200,000 orders, and I'm not sure you have the capacity to make that number of vehicles.
Well, you know, if you look at what we did during COVID and, you know, Willow Run, I mean, Ford knows how to make complicated things in high volume. So once the company makes up its mind to be #2, we'll figure out how to double capacity of Lightning at the Rouge and build more Mach-E's. So it was just a moment where the leadership team had to make that commitment. We're a very scrappy company when it comes to scaling our manufacturing. This is what we do for 118 years. So we're in the middle of it. It's hard to handicap how it'll come out, but we're committed to getting to about 600,000 units running rate in 24 months. So I was at the Rouge yesterday. We got our arms rolled up, and we're really putting plans in place to double capacity.
So I will say, just to play devil's advocate, some analysts question that number of getting to 600,000 within 2 years. What kind of capital investment will be required to get there?
There is capital investment. You know, we have to increase the capacity physically at the Rouge plant. We only capacitize about 80,000, so we'll have to double that. And that means physically building a bigger building. That's, you know, it'll be hundreds of millions. The biggest issue is batteries. When you change technology like we're going through right now, supply chain becomes a critical and strategic advantage. So right now, the biggest issue is getting batteries. And that costs a lot of money. Battery plants are very expensive. We announced Tennessee and Kentucky. We're talking about tens of billions of dollars here. And that's really the constraint to get to 600,000 is to get those batteries.
I did see that you pushed back the launch of the electric Ford Explorer and also the Lincoln Aviator SUV. Was that because of demand or capacity?
Well, we really need to prioritize right now. We have 3 hits on our hands. Frankly, we had no idea that F-150 Lightning, Mach-E, and the E-Transit are going to be as popular as they are. You know, the demand is probably 3 times what we are producing today. We need to really simplify the focus as a management team and scale these, and also, you know, become profitable and improve the design of the vehicle even after we start building them. That just requires focus. And because of that, you know, we had plans to put certain vehicles in certain plants. We're now going to be doubling the production of, let's say, Mach-E, and now we have to find another place for all those vehicles to be built.
We can't talk without talking about microchips, semiconductors, and the problems that we've had, all automakers have had, really, in the supply chain. How are you providing for the long term? I know you announced a big deal.
You know, it is a big deal. We're the #1 producer of automobiles in the U.S. I think we have about 1 million indirect jobs. So it's a big deal for Ford, and it's a big impact on our American workforce. We announced a commitment with Global Foundries, another great American company, to build semiconductors in upstate New York. And that's an MOU at this point. We're hopefully getting to a definitive agreement where we're going to be able to ramp up and be less dependent on Taiwan and importing these chips from the outside. I think really, you know, we managed our supply chain in just in time. And when you look at the best in the world logistics companies for these new electronic components like Cisco and others, you know, they really manage the electronic components differently, not just semis, but memory chips, cameras. And the way we have to do that, we can't run it just in time. We need to run buffer stocks. We have to have off-the-shelf engineering backups for semiconductors that are constrained when we single source. It's just a whole different way of managing your supply chain. Now we're a technology company. We have to learn from them.
How much have you learned about taking some of the microchips out of the vehicles, or at least scaling down so that you can have more supply? And where are you in 2022? Are you going to be through this problem?
I think I think 2022 is still going to be an issue for us in the whole industry. It'll get better every quarter, and it has, but and we're going to have an incredibly profitable year. We just increased our guidance last quarter. But yes, absolutely, we expect this to go all the way through 2022. That wasn't what we expected 6 months ago. So things are getting, are still very challenging. I think as far as designing the vehicle, around semiconductors. We have about 1,750 semiconductors for each vehicle, and that's going up, not down. So what's really changing is the kind of semiconductors. We used to have very feature-rich semiconductors in our vehicles. Now we're moving to more advanced nodes, and so I'd say the chip count is going to go up on vehicles.
So, Jim, I want to talk about your friendly rivalry, at least on Twitter, with Mr. Elon Musk. I saw that you congratulated him. You were very gracious to congratulate him for being named Times Man of the Year, even though you got Motor Trend Man of the Year. And you said you really set an example for us. Can you catch up and beat Tesla?
Well, the first inning of this 9-inning game is for us to get to 600,000. We think that'll put us in number 2. And then with Tennessee and Kentucky, we really have a chance to get to number 1. It'll depend on the acceptance of those models. That's a couple years away. So it really is on us to execute the products, for them to be received as our first 3 have, and then to scale. A lot of uncertainty, but I wouldn't bet against a Ford team. I really admire Tesla and Elon for what they've done. And it's clearly showed that an always-on relationship with the customer is where this industry is going. Not just propulsion going electric, but actually having a digital relationship with the customer. And I'm very thankful for that. But we're competitors, and I race, and second is the first loser. So we're gonna go for it, and but we'll see how it goes. It'll be a couple of years away.
Yeah. For those of you who haven't seen, you should see some of the photos of Jim Farley behind some of those vintage race cars. You do genuinely race. Let me talk about another competitor, though. The analysts tell me that you probably will produce more electric vehicles this year than General Motors. Can you stay ahead of GM?
Well, they're certainly ramping up, but we have 3 high-volume successes on our hands. So it will come down to that agile team really breaking those constraints. Hard to say, but we sure count on it. We think we'll be number 2 for some time to come in the U.S. and obviously aiming for number 1. But they're ramping up. They have a lot of new models coming out. I wouldn't bet against Ford. The Mach-E, is very successful globally. And we have America's best-selling vehicle for 45 years now, the F-150 that's going electric. That's a pretty strong brand, and the product is very well received, so I wouldn't bet against Ford.
Fair enough. Also, a lot of us are contending right now with COVID and the various variants that are coming up, whether it's Delta or Omicron or whatever. How is that affecting your operations, your production operations?
Well, it's having an impact. Our vaccination rate on our white-collar team is about 85%. We have protocols in our plants. We've been operating for 2 years. They've held up really well. I'm very proud of our team and their safety record. What we're seeing now is impacts on our supply base, where we're having trouble finding labor. And once absenteeism gets above 20%, we start to see interruption on parts shipments. So we are starting to see more and more, actually, the last couple months, disruptions. Nothing that's really gating us right now. What's gating us is the chips. But it's getting harder and harder to scramble every day to make our production because of some of the absenteeism we're starting to see in our supply base. And
finally, Jim, I've never met a CEO that didn't think his stock was underpriced at the same time. I think yours is up something like over 200% since you took over as CEO back in October of 2020. Can you keep up that pace in terms of the valuation of your stock?
Well, look, our stock value at Tesla's $1 trillion value would be $250 a share. So, I know that once we prove to ourselves and to the rest of the world that we are going to be a winner in this digital electric world, and we can make our ICE products even more profitable, I see a lot of upside in the stock. But we're not focused on just that. We're really focused on running a better business. And that means really making sure our ICE business continues to get healthier and healthier. We made the tough choices in India and in Brazil to get out of manufacturing there this year to really liberate the profitability of our ICE business. And we're really working hard on improving the profitability of our BEVs as we start to scale them. So yes, I'd say there's a lot of upside. Don't sell your Ford stock, but it's on us to deliver.